Hey folks, Mike Shorr here with Prosper Trading, prospertrading.com. How are you today? Today I wanted to talk a little bit about the day trading methodologies that we use in here in our short-term options room, and to give you an example of how it works. So what we had today is we had oil up in the early part of the market. It was up about 1.5%. It's up about 3.3% as we talk right now. But what we did is we kind of had, the perfect storm. What we had is using our relative price movement methodology, which is this top area here. We had significant volumes coming in, which brought it onto our scanner to begin with, and we saw that as oil continued to move up, Hess went with it. We did not wait until we established the initial balance. That would have been more conservative, but we saw the writing on the wall. The markets themselves were up in early trade, and oil was up. So we got in here at about 6:38 in this area right in here, and then we bought next week's 66.5 call. We paid $1.31. So after we established our initial balance, it continued to move up. We were targeting this first target, and in a market like this, I was not about to try and squeeze any sort of big runner that we're going to hold on to for the better part of the day. When I saw things, when we hit that first target up at a high of 67.15, and we started to come down directly after that, right here, signaled to get out, and then we were trading 67.03, and so then we got out of those same calls the next Friday's 66.5 calls for $1.80. So that's a nice little 37.4% winner in the space of about 10 minutes or so. This all happened under significant volume, which is very, very important. That a move on air is simply just a move on air. You're not really as fast as it can go up, it can come down. As fast as it goes down, it can come back up, because there's nobody in that game playing. So they go and they search for where the next place was. Like I said, it was the perfect storm because we also had our breakout methodology using the squeeze. We had a breakout into, again, significant volume, and then the blue teal histogram here suggests increasing momentum. So technically, if you were being very, very conservative, you probably would have missed, you would not have gotten out at this, but primarily we got into it because of the relative price movement methodology. So that's what was going on, and I really can't explain why we are back to where the initial balance is. Still up on the day. It's up 3%, but it really rocketed up early on. So now it's almost up exactly as much as oil is, about 3.5, 3.4%, somewhere in that neighborhood. So that's just an example of what we do here. That this type of trading happens frequently in the morning. Sometimes we do get some stuff midday and into the close, but definitely the first 45 minutes of trade is when we experience most of these type of moves. But that is part of what we do here in the short-term options room. I want to remind everybody that stock and options trading involves substantial risk of loss. It's not suitable for every investor. The valuation of stocks and options may fluctuate, and as a result, clients may lose more than their original investment. All trading strategies are used at your own risk. So again, Michael Shorr here, short-term options instructor here at Prosper Academy. That's www.prospertrading.com. We'll see you next time.